Hey investors! For the second week of October 2022, we present the top 4 stock choices to buy this week. Ranging from cloud services to the food and agriculture industry, we bring in 4 drastically different companies with some very promising prospects. Since the start of 2022, the finance world has been experiencing high volatility due to multiple ongoing economic uncertainties, including zooming crude oil prices, rising inflationary pressure, and the quantitative tightening by the Fed to curb inflation. In addition, the Russia-Ukraine conflict has aggravated the global supply chains and made things worse. The current economic environment and the uncertainties have made it increasingly important to identify strong industries and invest in the select stocks. The top stocks that are set to outperform the market in this environment are: number 1, Salesforce, ticker symbol CRM. Salesforce is engaged in the design and development of cloud-based enterprise software for customer relationship management. Per the latest Gartner report, spending on public cloud services is estimated to grow from $410.9 billion in 2021 to over $494.7 billion by the end of 2022. Additionally, Grand View Research found that the global CRM software market was valued at $52.4 billion in 2021 and is projected to witness a compounded annual growth rate of 13.3% between 2022 and 2030. With its software as a service-based CRM and social enterprise applications, Salesforce is well positioned to lead the market. CRM currently makes more than $25 billion annually and trades at an attractive valuation multiple. The stock currently trades at 27.2 sales per share versus a 5-year average of 20.3 and has a price book value of 4.0. The firm is known for making big acquisitions, such as its purchase of Slack Technologies, a maker of the workplace collaboration software, for $28 billion. Additionally, Salesforce has partnered with Amazon Web Services and Alphabet for the firm's cloud services, helping it expand its international operations. Next up on our list is Nutrien, ticker symbol NTR. Nutrien is a Canada-based leading integrated provider of crop inputs and services. It supplies growers through its leading global retail network and operates more than 2,000 retail locations across the United States, Canada, Australia, and South America. The company plays an important role in helping farmers around the world increase food production in a sustainable manner. It includes 3 crop nutrients: potash, nitrogen, and phosphate. The retail segment distributes crop nutrients, crop protection products, seeds, and merchandise. The potash, nitrogen, and phosphate segments produce differentiated chemical nutrients contained in each product. NTR is considered an ESG-focused company, which has seen a massive inflow of money from investors, and this shows in its stock price. The firm makes more than $25 billion in sales annually and is also focused on rewarding its investors through dividends and share repurchases. Additionally, the stock is up nearly 11% year-to-date, while the S&P 500 is currently in a bear market, down nearly 17% year-to-date, signifying the bullishness of the stock. NTR shares are ballooning from higher prices and strong demand for crop nutrients, coupled with the company's actions to boost production and make strategic acquisitions. Our third stock is Advanced Drainage Systems, ticker symbol WMS. Advanced Drainage Systems was founded in 1966 in Ohio and is engaged in the manufacturing of thermoplastic corrugated pipes, which provide a suite of water management products and drainage solutions for those in construction and infrastructure markets. The firm makes $2.7 billion annually and has a strong EBITDA margin of 25%. Advanced Drainage Systems is currently set to benefit from the trend within the construction industry that replaces concrete with unrecyclable plastic. The firm has an addressable market opportunity of approximately $7 billion and will also benefit from being ESG focused and having a leading market share as the only plastic player of a large scale. Even though the face value might seem a little expensive when compared to the broader market, it can be a great long-term investment. Before we move on to our last stock, be sure to hit that like button and smash the bell icon for more insightful videos. Our last stock is Chewy, ticker symbol CHWY. Chewy was founded in 2011 and is the largest e-commerce pet care retailer in the US. Chewy provides pet food and treats, pet supplies, medications, and other pet health services across 70,000 products from 2.5 thousand partner brands. The firm makes nearly $8.9 billion a year and has a gross profit margin of 26%. In 2017, Chewy was acquired by PetSmart through a $3.3 billion leveraged buyout and recently partnered with Trupanion in 2021, the biggest pet insurer in the US, to offer wellness plans to over 20 million Chewy customers. Pet food and services is a high growth and upcoming sector with very few listed players in the US. In addition, pet insurance is another niche sector where only Trupanion has a pure player. This is a highly fragmented industry with a lot of white space opportunities and consolidation, making it a great unspecialized sector for growth. Chewy is down almost 70% from its all-time high, making it an excellent accumulation zone for long-term investors. The 4 stocks covered today are all positioned uniquely in high growth or niche sectors with a lot of upside potential. Some are oversold and provide opportunity to give quick returns if the broader market reverses, while some prove to be a long-term strategic investment if you plan on setting your sights further on. The Metaverse industry is predicted to grow from $38.35 billion in 2021 to nearly $1 trillion by 2030. Check out our video on the best investments you can make to leverage this booming market. Thank you for watching, and please subscribe to our channel for more investment videos.